Hello and welcome to our weekly market outlook. It's Monday, June 15, and we'll be with you with the short outlook. We'll check together the market latest news and updates, geopolitical news, changes that we had, and we'll see together what we are expecting from the market in the next days, especially for the week ahead. We are at the beginning of the week 25, and this is the week that we are waiting to see the several central banks meetings. It's a very important and very busy week. On the other hand, at the beginning of the week, we had a very important news, which was the deal between United States and Islamic Republic based in Iran. As you know, uh, they decided to go forward and sign the deal that can somehow tell us that now the market can count on a lower tensions at least for 60 days. That's the deal of not just like a peace talk, or not just not this deal is not going to end the war, but it's going to pause it at least for 60 days. This is what the market expecting to see. The deal, which means that the Strait of Hormuz should be open immediately, and Iranian oil exports also can start. On the other hand, Iranian can use $25 billion of the credit line. It's not a cash money, it's kind of the credit line that can let them to buy the things that they want, and will be paid by the credit line that they have from their own money that have already been frozen by United States or other countries. On the other hand, today we know that today is they reached a deal. They reached a deal on the Donald Trump's birthday. The guy who killed their leader, and now we can see that that a few months ago their leader, the Islamic Republic, based in Iran, their leader Ali Khamenei was telling that we are not going to have a negotiation, and it's not going to be a war. So we saw the war, and we saw that they had negotiation. They already gave up and gave whatever Donald Trump and United States wanted from them. That was really just kind of strange. They could do all these things before their leader have been killed, but that's good for us. At least we know that the one more terrorist, or the bunch of terrorists have been killed already, and we're gonna probably have the Iran also free again, and we can see the Iranian to have a normal life without these dictators. Anyhow, the Iranians somehow they accept all the terms that the American they were asking them, and now this is the situation that can happen. That's why the market is somehow positive about the situation. Being the positive about the situation helped at least the stock market to gain till now. We can say till now, but the thing is that whether this positive sentiment that right now we have in the market can continue or not is depend on two things. One, from Iran, the Islamic Republic based in Iran, they have a hardliners, and these hardliners they know already that they gave up, so they are not happy with this deal, and that's the reason that maybe they can somehow encourage Hezbollah in Lebanon to attack the Israelis. And Israelis say that if they attack, we're going to reply this attack. So if they attack to the northern Israel, Israelis can attack back them in the south of the Beirut in Lebanon. And Iranians say that if the Israel attack to the Lebanon, we're going to attack back, and there is no, it's the deal. We can forget about the deal and all the negotiations that we had. So that's their risk right now. And the market knows, market knows always there is we can find some stupid between the hardliners. That's why the market risk is still so high. Compared with the previous week, yes, it's lower, but with the looking at the reality of the market, it's still high. Anyhow, last week we also had the IPOs, many IPOs that were in the market. Even the market just focused on SpaceX IPOs, and amazing growth that it had at the first day, almost 20% grow at the first trading day, but still we had different IPOs, not just in the United States, in China and some other Asian economies, mostly about the AI related spaces, AI related companies and tech companies. That's why the market and tech markets, tech stocks, they gained very well. Last week, finally, the Dow Jones closed 0.7% higher on Friday. S&P 500 gained 0.5% and Nasdaq 0.3%. However, the future market with the Iran deal and considering with the just like oil market and its effect on the central bank's possible decision that we're gonna have later this week, had a positive reaction. So far, Dow Jones gained almost 1%. Now S&P 500 is 1.2%, and the Nasdaq is up almost 2% so far. But mostly we had a positive reaction in Asia, where the Nikkei is gaining more than 5.3%, and Kospi is up by more than 5.2% so far. These numbers telling us that the market, especially tech-related market, they are very happy from the situation that we have there, and most of the stocks across the Asia, they are positive. Not just Asia, US futures also we saw that was a positive. On the commodity market, however, let's before talking about the commodity market, let me say, we'll review the bond market. US 10 years bond yields is down to 4.43%. Don't forget, this number was 4.54% last Thursday. 4.54, or let's say 4.53, and now 4.43. That means that the market risk premium is so lower now. The same thing that happened in Asia, Japanese 10 years bond yields down to 2.57 from previous week of 2.69. That telling us that again that so far the market is counting at least for like 60 days period of lower tension. That can put the pressure on bond yields, and that's the reason that we could see some positive reaction in the commodity markets like gold and silver. Gold gained to 4,334, while the silver is above $70 so far. On the other hand, look at the energy prices. Oil price WTI is almost $80, and the Brent oil is around $83. Look at these numbers. Those numbers, they were 80, just like 92, 93 for WTI and 95, 96 for Brent oil just last Thursday. That can tell us that they had that can change the inflation expectations. Why I'm talking about inflation expectations? Because higher oil prices increase the producer price index, and higher producer price index increase, I mean the production price, higher production price, it can increase the inflation expectations for the consumers as well, which means the central banks should hold the rates for higher for longer. But when you can see the oil price falling, it means that you don't expect the energy price to stay so far, just like for a long time higher. That can support the central bank's decision. We will talk about the central bank decision before talking about the upcoming week and the decisions that we will have this week. Let me first review with the decision and the news that we had previous week. Last week, week started with the kind of the light Monday, while on Tuesday we had the Chinese trade data and US trade data. Especially in China, looking at the import increasing by 27%, export by 19%, especially with the import increasing by more than 27%, telling us that the Chinese initial demand, or kind of the Chinese domestic demand of the China, the biggest Chinese Chinese economic concern was lower spending by the Chinese people. And with increasing this domestic demand, we can say that, okay, now the Chinese are getting more encouraged to spend the money. So that can help the Chinese economy, GDP as well. So such a good export and import means the Chinese economy is getting slightly back to the life. While in Indonesia, we had central bank meeting increasing 25 basis point interest rates because of the higher inflation. On the other hand, later in US season, we had US trade data also just like in a better situation. trade deficits in the United States got lower, decreased. Later, we had EIA short-term energy outlook in United States, and the next day we had OPEC monthly report as well. Both these monthly report, they showed that they are decreasing. They lowered the demand for the oil for 2026, but for 2027, both expectations are about the, just like we have the Strait of Hormuz reopened and the market gets to the normal situation. So they are not so much concerned. We don't have so much concerns about the global demand and supply for the oil in the both reports. On Wednesday, it was a very important day with the US and Chinese inflation numbers at the beginning of the day. In China, even though this inflation, consumer inflation on the monthly base lowered by 0.1%, annually the inflation increased by 1.2%, which can be the positive news so far for the Chinese economy. But most importantly, producer price index or PPI increased by 3.9%. It means that at least in the short term, we are not expecting to see just like these consumer prices also can fall. That can support the somehow the Chinese economy after long term of having negative or lower inflation in China. In United States, inflation numbers just like met the expectations annually. CPI, the headline increased by 4.2%, and the core inflation increased by 2.9%. That was in line with expectation, and with these numbers, we can say, okay, inflation at least so far is sticky, even though we are expecting to see just like energy prices lower, but we are not expecting to say that, okay, now we can say, okay, now this inflation is something that can change the central bank, just like lowering so fast that can change the central bank's policies. No, it's not going to happen right now, especially in the United States. We will talk about that. But last week in Canada, Bank of Canada hold the rates unchanged before ECB meeting. BOC hold the rates unchanged as inflation is not so high in Canada. On the other hand, while we know that the Canada's inflation economic growth is just like main concern right now. So the central bank in Canada had no reason to hike the rates. In Russia, inflation lowered from previous month from 5.6% to 5.3%, shows that inflation is same. It's the same trend that we have in inflation in across the economies in all economies. On Thursday, European Central Bank hiked the rates by 25 basis points. I talked last week about that. European central banks, generally the European economic model is that if they want to choose between the risk of inflation or the risk of economic growth, they choose the risk of economic growth because the inflation is not something that they can expect to stay higher. That's the exactly opposite side of the US economic model, where if they want to choose between the risk of inflation or risk of economic growth, they choose the risk of economic growth. And they will let the they will let the economy, they will support the economy to grow, and we let the inflation to grow even if just like we support the economy to grow even if the inflation grows. So the main just like the higher priority for US model of economies economic growth, but in European model of economy is controlling the inflation. So that's why the European Central Bank, even just like with the inflation at these levels, hiked the rates. On Friday, we had too many data, especially from United Kingdom, generally US economy, European, UK economic data, sorry, from United Kingdom and UK economic data. They were not such a good and brilliant. That's why we are not expecting any monetary policy change or policy change in the UK economy, UK central bank meeting this week. In European economies, we had the inflation numbers in different economies from just like French, Germany, and the other economies, mostly Spain, mostly the inflation was not, I mean, that was flat and didn't change. In Germany, state 2 points, lowered slightly to 2.6% from 2.9%. In Spain, it was unchanged at 3.6%. Same in French, it was unchanged at in Spain 3.6%. In French, it was almost 0.1% on the monthly growth. Generally, the inflation didn't have a surprise. We didn't have a surprise last week in the inflation numbers. In the week ahead, well, today, just like we're going to have not such a big day and surprise with the numbers, trade data from Eurozone should be watched closely. But Tuesday, tomorrow, we're going to have so much data from China. It's going to be the Chinese day at the beginning. While we know that the Chinese inflation I mean, it's gonna be the Asian day actually, because it's gonna start with the China, then Japanese and Australia. In China, we're gonna have too many data: industrial production, manufacturing production, safe asset, I mean, fixed asset investment. Generally, what I do expect is, what I expect is to see some positive data for the May from the Chinese economy. So tomorrow's Chinese data probably will be the positive and can give us slightly brighter view from the Chinese economy. Then we're gonna have the central bank meeting in Japan while the Mr. Ueda is sick and in a hospital. Bank of Japan expected to increase the rates by 25 basis points. We know that recently Japanese inflation has been growing, while on the other hand, Japanese yen was weakening so rapidly. That's why the central bank in Japan, to control the rates for the currency and for the inflation, they probably have no choice than to hike the rates. But it's going to be the only rate hike probably in 2026, and we'll not see any other rate hike. The statement will be very important to watch. On the other hand, in Australia, while the Reserve Bank of Australia already hiked the rates rapidly in recent months, I don't see any reason for now to Bank of Australia, to Central Bank of Australia, or to Reserve Bank of Australia to hike the rates. Even I think that they can cut the rates because the inflation is not so high in Australia, but the economic growth, they have concerns of the economic growth. Then on the next important day that we're gonna have later is will be on a Wednesday. Wednesday, where we will have the inflation numbers beginning this, like the Wednesdays will begin with the inflation numbers in United Kingdom and the Eurozone. European inflation expected to stay unchanged at 3.2%, and UK or British inflation expected to increase slightly from 2.8 to 3% in May. But generally, expectations for lower, just like for the next month, is to see the lower number. However, market will focus. We're gonna have the retail sales numbers, pending home sales, and many other data like that in United States. But market is waiting to see the Federal Reserve decisions and dot plots. This week on Wednesday, the most important number that, I mean, the most important event of the week will be the Federal Reserve meeting, and we're expecting to see the Federal Reserve to hold the rates unchanged at the current rates. There is no expectation to cut the rates, and there is no expectation to hike the rates. So 3.75% will be the next rate as well. However, the market participants and investors and traders will focus mostly on FOMC statement and economic growth projection, and also the dot plots. Especially these dot plots, they will be the main market driver. Even though that's the first meeting that Kevin Walsh will lead the meeting. Yeah, we know all of them, but the market will focus on dot plots. The dot plots will be the main market driver, but the press conference of the Kevin Walsh press conference also should be watched closely. In Brazil also, the central bank will have the meeting, and we're expecting to see the Brazilian Central Bank, or BCB, to hold the rates unchanged at 14.50%. And then on Thursday, we're going to have the Swiss National Bank SNB interest rate decision. There's also we are not expecting to see any rate hike or rate cut. We're going to probably, they will hold the rate at 0% as it is, but markets participant later will focus on BOE monetary policy meeting on Thursday, where we're expecting to see to hold the rates at 3.75%. The market will not focus on that because this is something that we already know. What we have to watch as a trader is the number or the number of the votes. So far, we are expecting the market expecting to have the 8 votes for holding the current rates and 1 vote to hike the rates. Any changes in these numbers between the numbers that if that's just like if any changes can see on the just increasing the number of this not 1 vote from like the rate hike votes from 1 to 2 or 3 or vice versa, that can tell us that how the central bank can be hawkish and dovish, and that's the main market driver in later in United Kingdom. And then the market will just like that's those are the most important numbers that we have to watch on Thursday. And on Friday, interest rate decision in Russia will be the most important number to watch. We are expecting to see that the Reserve Bank, just the Central Bank of the Russia, also to cut the rates by 50 basis points. from 14.50% to 14%, while Canadian retail sales also should be watched more closely. Uh, that's the most important thing, the events that we're gonna have later this week, and the numbers that we're expecting, and compare just like considering these numbers and these changes, let's see what we can expect from the week ahead. This week, while I do expect to see the market risk slightly lower, uh, well, your screen share is paused. Why my screen share is paused? Okay. This week, for as for the market risk, what I expect is to see the market risk is somehow slightly lower than the current 18.90, but I don't see any reason to see the risk lower than 17.50 or lower than 17, let's say like that. Because still there are many risks that we can see the current deal will be gone, and for any risk that so many risks we have about the current Iran deal, Iran and US deal. So, and still, they didn't sign it properly. They're going to sign it on Friday, June 19. So still June 19 and Friday, I don't think that we're going to have the risk market is so lower. With higher risk, we can say that the US dollar index can hold above 98.50. Now it's trading around 99.20, maybe slightly lower also, we can see lower levels, but 98.50 is the most it's like I don't think that we can see US dollar index lower than this. 98.50 is the 98.50 60 is the lowest level that I can imagine for the US dollar index fundamentally, because the market risk is still so high. On the other hand, looking at the other market, gold price with the lower yields, lower bond yields, and slightly weaker US dollar, gold price slightly increased. And my projection is to see the gold price to increase further this week. And I'm slightly positive about the gold. Same situation I expect for silver as well. The silver price also about $70 should be traded this week. For the stock markets, generally, yeah, still the positive, we are positive, especially with the sentiment that we have in the market. But to see the higher in the higher rates and new records, especially, we need the more potential, more energy and more positive news in the market. With the current situation, we already had everything that we could have, especially with the SpaceX stocks and with the IPOs, with the earnings, with the positive news from the deals that we had, geopolitical news, all things that they could support the market we already had. We already had the all-time highs. For now, I think that for now, for June, July, probably we're going to have slightly weaker numbers. I don't expect to see stock markets to grow so fast or rapidly these months. Still, I'm the positive, slightly positive, but not for the new all-time highs. Same thing for S&P 500, Nasdaq, and the Dow Jones. For the cryptocurrency market, looking at the numbers, yeah, the price is higher right now, 65,800. The Bitcoin is increasing, but still the outflow from money from the outflow, the cash outflow from the cryptocurrency market, especially ETFs, are so high. That's why I don't see still any strong reason to say that okay, the cryptocurrency markets are positive and they can go further. Geopolitical tensions slightly lowered, and that somehow positively affected the cryptocurrency market. But I don't see this positive reaction can go further for longer. That's why still, unless if I see that some positive news comes from the stock market, from the cryptocurrency market, or say that okay, these companies, these companies, they start to buy again the cryptocurrency, to buy again the Bitcoin, and the cash flow towards the cryptocurrency market is getting increased. That's the only reason. Otherwise, for now, still I'm so cautiously watching the cryptocurrency market. Yeah, that's what happened previous week and what we're expecting to see in the week ahead. Hope it was useful for you. Talk to you soon. Have a good day. Bye.